what was your thought process behind doing these certifications, and how did you manage doing it?
Doing them when the need came to be.
Okay.
Right? For example, in the first 2 years, 3 years of my career, I was looking into portfolio analysis. है तो CFA is the first thing that comes to your mind.
What each certification is taught you?
Right? So CFA does give us a lot of holistic view. And there is a lot to investing, finance, portfolio management that comes to the eye, that meets the eye of a person, even if you're working in the industry.
If I start my career market risk, will I be able to move to credit? Will I be able to move to some other role?
Entry, right? Getting that first opportunity is difficult. So that I will agree with.
When people think about this, okay, how will I change my role? There are two fears that come to their mind.
Right. So investment management, especially in my context, it is supporting the core business. Right? It's not an asset management company. So it's not the core business as such. It does generate revenue, but it's not the primary business why the company was established.
But from the risk angle also, do you have to think about that, or you're purely going to look from the risk side?
So the investment manager there would be like, look, this is my strategy, this is my expertise, this is how I see things going, and I want to take up this trade, I want to take up this position, I want to enter this market. Now tell me how I can get this done.
Hello guys, I hope everybody is doing good. Hi, this is Ganesh Nayak. I help finance professionals and students to excel in their career and become a better version of themselves. And I also help students who are preparing for competitive exams in finance, like CFA, FRM, SCR, and CIA. And as a part of the journey, we also talk to people from the industry trying to understand what are the different roles that are available in finance and how anybody can make a very good career in finance, right? And I am today having discussion with Mr. Chinmay in Ingole. And here we're going to be talking about his entire journey in the industry. He's already completed CIA, CFA, FRM, CFP. What has been his overall experience within the risk side, okay, and what is happening in the investment management risk side. So, Chinmay, first of all, thank you very much for taking out time and talking to us. For the audience, if you can give a brief about your entire journey.
Sure. Thank you for inviting me. So it's looking back, it seems like a long journey. Started my career back in 2012. I'm a mechanical engineer. I worked in a factory for a year. Then I moved to MBA, did my MBA for 2 years, and from there I got placed through campus. The first role I started off with was not of my choice, but as you're aware, in campus you choose the brand probably, but not the profile. You don't get to choose both.
Right.
So I chose the brand. I was placed into portfolio analysis group. So performance analysis, portfolio analysis part of the group. Worked there for 2 years. After that, I moved to the risk side of it. Again, I worked in retail side of the credit risk, specifically into credit risk.
Okay.
Right. So this was a unsecured lending portfolio.
Mm.
Both the roles were in US markets.
Okay.
So I worked there for a couple of years and then graduated to portfolio management, portfolio risk management to be specific. This was in a different domain. This was in UK and primarily focused on Europe. Again, this was a hedge fund working in a fund of fund sort of a structure, platform structure. There I was looking into overall portfolio risk, market risk, credit risk, and a bit of regulatory risk. Multi-asset, I mean, everything that you can think of, right? Being a hedge fund, they had different strategies, long, short, distressed, credit, private equity, everything. Derivatives, managed accounts, everything except cryptos. So that was the exposure I had there for maybe 4 or more years. Currently, I've moved to another side of risk. So which is on the, first of all, it's an Indian domain. And now it's in the insurance sector.
Insurance.
Profiles, the work I do is somewhat similar. The view I bring is somewhat similar. I'm looking into portfolio risk, market risk, credit risk, everything. But for an insurance company, insurance portfolio.
Wonderful. I have a lot of questions with respect to risk wala part. But before we go into that, I want to explicitly ask related to certification.
Right.
Now you have done so many of them. Okay. What was your thought process behind doing these certifications? And how did you manage doing it?
So yeah, looking back, it seems like there are a couple of them there. But I didn't set off with that intention that, look, I want to do X number of certifications. Started doing them when the need came to be.
Okay.
For example, in the first 2 years, 3 years of my career, I was looking into portfolio analysis. Hai, to CFA is the first thing that comes to your mind. Perfect, right? So that's how I picked up CFA. And transition to risk was like a slight deviation here. I mean, I will just add a bit background on that part. Sure. I was looking into HNI portfolios, big portfolios, not huge, but considerably big and chunky portfolios. Now, when you look at retail side or smaller portfolios, rather, the focus is on growth. But when you move to a certain threshold, you cross a certain threshold of wealth and you realize, okay, growth is definitely necessary, but you need to also manage the downside.
Yeah. Risk becomes important.
Risk becomes important, right? As Warren Buffett says, first rule of investing is not to lose money.
Correct.
So that kind of thing. So that's where my focus shifted to risk.
Yeah.
And to explore careers in risk, I did FRM. But it was not a parallel journey. I started in risk and then parallelly to support that learning, I did FRM.
Okay.
Then I moved to alternative space,
Hedge fund space.
CIA came into picture. CFP was a bit of mix of all these things and a bit of my curiosity as well. Operational part, again, I've done Six Sigma Black Belt. That was also much out of curiosity and a bit of requirement from organization. So yeah, it's pretty organic at times.
From your perspective, if you can just summarize what each certification has taught you.
So CFA does give us a lot of holistic view. And there is a lot to investing, finance, portfolio management that comes to the eye, that meets the eye of a person, even if you're working in the industry. There's a lot of times you focus in one particular particular group of finance. Gives a very holistic view and broadens your perspective, basically, if nothing else. FRM is very quantitative as the risk is. So it focuses on being very, very methodical, analytical, very detailed, right, as the risk goes. Coming to CAIA, again, that's opens up your perspective in alternative space specifically. So we're not talking about retail, we're not talking about other parts. It's institutionals and alternatives primarily, because retails usually don't invest in alternatives. Correct. CFP was for my personal benefit, to be honest, because okay, these are big money, big bulls in a way, big money clients. We don't start with that level. So if you manage your own portfolio, forget about certification, forget about career. If you have to manage your own portfolio, you need to understand how to look at overall wealth management of your personal wealth, if nothing else. Okay. Well, just to add one tidbit on the CFP part, we always hear the part, insurance. Everyone should have insurance. Everyone should have life insurance. Everyone should have health insurance. But why? Technically, it's not true that everybody needs a life insurance. At least in my view. I mean, I'm sure if you ask insurance, it's very controversial, but yeah, and I come from insurance industry now. Right. So there will be people who say, carry insurance. Oh, it's one night stay. But my personal view is everybody doesn't need same level of insurance at least.
Correct.
So you need to understand where do you stand. So that helps. I mean, they're always going to tell you, no matter how many financial advisors you have, nobody's going to tell you your customized product to the T. On daily basis, you're the one who's.
So you should learn basically. That's what you're saying.
You should learn. Yeah.
CFP आपने किया because you wanted to make sure that your own financial understanding about these.
Yeah.
Interesting. Yeah. Interesting. Now, you have moved, initially started your career into the credit risk of the retail side.
Yes.
Now, I have a lot of students, candidates who have this query, okay, especially for FRM, that if I start my career in market risk, will I be able to move to credit? Will I be able to move to some other role? You have changed the entire, first of all, you change the industry.
Yes.
Then you change the entire role also from core credit risk side to the portfolio, then to the overall investment risk also. How did you manage to do it? What challenges you faced?
Entry, right? Getting that first opportunity is difficult. So that I will agree. I mean, especially in our markets when there is a fierce competition, there are so many people who are standing for that particular role. Right. See the job market and you are aware of it. So getting that first opportunity definitely is difficult. And having the credentials, right? Good institution, good certification, good companies on your profile, that definitely helps. It helps in opening the door.
Okay. So when you move to the hedge fund side,
right?
So your CFA was done till that time.
Yes, I had.
So it helped you in getting that interview. Okay.
But every time you're moving, right, you have to come with the perspective, you have to come with a thought process that I am starting from scratch. Correct. At least that's what I believed in. Obviously, you are building up on the knowledge and experience that you have, but the only purpose of doing it is you shouldn't have any prejudice. Okay. To take away those prejudice about looking into industry, you need to come with a firm belief that, okay, I'm starting as a student here. Let me learn with an open mind. Yeah. A lot of times when people, at least in my journey, when the people, when the institutions, when the managers were hiring for somebody like me, that was their objective. Let's get some fresh fuel. Let's get some other perspective into the picture.
Just a connecting question, because when people think about this, okay, how will I change my role? There are two fears that come to their mind. First of all, I will have to start at an analyst level,
Right.
and second is that I will have to take a pay cut.
Right.
So, what is your view on that?
No, that's not true. I mean, when I say you have to start with the open mind, it's your thought process. It's not the organizational hierarchy. Okay, so if you may be moving from maybe finance to operations or finance to, let's say, IT, that is a totally different shift. So, not go into that part. But within finance moving, I don't think you need to take a pay cut or a downgrade.
Gets a lower role.
Right?
Okay. So normally it's they will occupy you in the same role at a decently good salary,
Yeah.
and they will pick you up, and they will give you the time to learn also.
Yes.
Okay. Okay. This is very interesting, because a lot of students who there are people who come from banking. They're already working in a bank. They're a branch manager and all. They want to move out. They want to try investment banking.
Right.
The first fear is this. Okay. Now, let us go more into the latest tool that you're doing, which is investment management risk. We have a book in FRM talking about it. But for the audience, if you can give a simple understanding that what is that risk and what do you do in this in simple terms?
Like, so investment management, especially in my context, it is supporting the core business, right? It's not an asset management company. So it's not the core business as such. It does generate revenue, but it's not the primary business why the company was established. Okay. In insurance sector.
In insurance, correct.
Having said that, it becomes a very big cushion to support the industry downturns, demographic downturns, and economic conditions. So, investment risk in that perspective focuses primarily on, I would say, supporting the business through the incomes, not taking too excessive risk, and basically making sure the business stays solvent and stays there for generations. Insurance, you're not talking about 1 quarter, 1 year, 1 decade for that matter. We're talking about 1 generation, 2 generation, 3 generation, that kind of a, right? At least in India.
Yeah. People are dependent on you, right?
Yes. And second is, we are forced to look at the holistic side of it, not just the market risk side of it, not just the credit risk side of it. We are forced to look at the industry trends, where the winds are turning, what regulations are coming up. And we had few changes in the regulations in the recent recent past, I think, last 15 days.
Okay.
So you have to keep on track of all the regulatory changes and how the winds are changing for that matter.
Okay. But what is your day, a normal day looks like
Right.
in investment risk?
Investment risk, yeah. When I come in, I start looking at my portfolio, how it has been till yesterday.
Okay.
We have systems in place to look at the pre-trade monitoring. So there's no manual intervention as such needed, at least in my role. I'm not saying this is the universal setup everywhere. The risk role starts after the action has happened, the transactions have happened on a daily basis. Like, that's one part of it. I look at the portfolio positions, I look at the exposures. So that would include the geographical exposures, asset class exposures, VAR, risk exposures, and everything.
Okay.
Once that part is done, then we look into, okay, what we're going to do next. So it was a bit of research as to what are we seeing, any stresses coming into economy, any stresses coming into portfolio. So that would be monitored through, again, certain parameters. We have our exposure limits and credit limit set up. So once that is said, okay, everything we have done so far is right, everything that is happening is right. Now we talk about future. So typically my day is into three tenses.
Okay.
Morning starts with past tense, what has happened to yesterday.
Okay.
Noon is somewhere around present tense, like what's happening currently. Towards the evening or towards the second, especially when the markets are closed.
Okay.
I look into future tense as to what should we do tomorrow, what should we do next week, next month, next quarter, where should we change, are there any stresses coming in. So maybe run some scenarios, run some stress cases, see basically what's the next big challenge that you are facing.
So that's where your economics ka knowledge from CFA will come to which
Yes, yes. That becomes very important. I mean,
the holistic view.
holistic view that becomes very important.
Okay. And do you also have to look at returns? In the sense, if I'm going to invest into, obviously the investment manager,
Right.
the fund manager who's going to be there, he will be having that target. But from the risk angle also, do you have to think about that? Or you're purely going to look from the risk side?
No, we do have to think of it because we are supporting the overall goal of the organization, right? It's not just looking into risk. And I would like to add two perspectives here, right? One from my alternative investment hedge fund kind of a view, and one from the current, which is more regulated side of the view.
Okay.
So in the alternative space, right, the fund manager has sole discretion, and the allowed universe, right, the investable universe is huge. As long as your investors are fine with it, you can invest everywhere. So the investment manager there would be like, look, this is my strategy, this is my expertise, this is how I see things going, and I want to take up this trade, I want to take up this position, I want to enter this market. Now tell me how I can get this done. So that's the conversation between a portfolio manager and a risk manager. The portfolio manager will ask risk manager, this is what I want to do.
Okay.
Let's make this happen.
Okay. So there is no much say of the risk team.
This is our strategy, right? We have the whole field open to us. This seems like a good opportunity. Let's make it happen rather than, okay, no, it looks too risky. It's not in the regulation. It's not fitting, in the view. Oh, this looks interesting. Let's do it. And then we work backwards, saying, okay, this is how we can get it done. Maybe we can raise, exposure from here. Maybe we can deduct from here. Maybe we can move from this sector to this sector, this geography to other geography. That's where the risk analysis comes into picture, where we look at where is the risk adjusted returns going to be the highest. Okay. That's where the returns comes into picture.
Okay.
When we come into the more regulated territory, insurance or retail for that matter, it is like these are the things we straight away can't do. So we start pruning our universe rather than finding out the new horizons. There's one space you're finding new horizons, being the leader. Other space you're just trimming down and pruning. This we can't do, this we can't do, this we can't do, this we can't do. This is what we can do. So let's make the most of it.
Okay.
And that's where the risk manager's whole comes into picture, saying, okay, boss, you can't take too much of leverage here. You can't short a security in this particular thing. You think if the credit risk is too much, fine, maximum we can do is sell or maybe take a hedge derivative or whatever the strategy may be. But yeah, that is the role of risk manager in this case is more, I would say, aggressive. Yeah.
And also, if you're looking at risk management of an alt,
Right.
as a risk manager, you have to be more equipped because the tools they are going to use, like you mentioned about derivatives, right?
Yeah.
So over there also, it has to be the risk person also has to have the understanding that how these tools are going to help us or how this hedge will actually end up turning out.
Definitely, definitely. Because when we talk about derivatives, like VAR, usually everybody is a basic understanding. VAR hai, risk manager hai,
Correct.
right? But you can't apply same approach of calculating VAR to a derivative portfolio, which is not a normal distribution.
Right.
Versus if you apply it in, let's say, maybe plain vanilla equity. So you will have to look at the Greeks in case of derivative portfolio.
Right.
Or usme bhi, if you have a situation like a short squeeze, that we had the nickel short squeeze after
Supply is not available.
supply is not available. Everybody's shorting and they want to close their position. So the price shoots up like anything.
Correct.
Then you need to understand, like, is that something that can happen?
Okay.
Obviously, some things you can't predict. Black swan events, you can't really predict as such, but you can make our systems robust. Even if it happens, we have our downside protected. Okay, this is the maximum we can have.
Now, going back to your experience into that credit card and the unsecured credit, with there you were looking only at the credit risk.
Primarily credit risk. But again, there are also economics. Somehow that subject doesn't leave your back.
Okay.
It comes into the picture. Similar example, if you are running a campaign, Black Friday sales, Christmas season, US. So credit limit expansions, you are offering zero cost EMIs and other things. So you need to understand which group of borrowers or group of credit card holders am I going to extend the offer. Zero cost EMI, I will extend to, okay, this subset. Credit risk, credit score, like very crude term of it. Credit score between 600 to 700. this demographic, this kind of a spending pattern.
Okay.
So this is where I'll give them credit score expansion. Slightly different demographics, maybe younger demographics, I'll probably give them zero cost EMIs.
Okay.
But I need to monitor my portfolio where the stresses are coming. Am I seeing too many defaults? Am I seeing too many delays in payments, rollovers? That's where the economic comes into picture, the early warning indicators for economy and for the my portfolio.
So just to add on to that question content, so before Black Friday, so I think so like 1 month before that, you would have finalized where you will give the offers.
Yes.
And then this will go to the system and suppose it's an app.
Hmm.
To an app, it will trigger to the user.
Yes.
So the risk team is working 1 month before
One
deciding.
more than a quarter actually. One is like when we finalize and it is out. So we are working few quarters in advance.
Okay, this is very interesting because when you're looking at the credit card pool or basically the unsecured pool, okay, you also calculate the unexpected loss and all of
Yeah.
these things, which we generally hear in the risk management space. So you have tools and all to calculate these and track it.
Yes, we have to track them. And moreover, we have to track it before they actually come through.
Okay.
Because when you're dealing with large portfolio, one small change in the income is going to affect a lot of portfolios.
So now I want to understand how the role has changed. Okay, the risk that you were looking before and how the risk you are looking right now. How that broader dynamics have changed for you.
So a lot of times, right, when I started like uh, 7, 8, 10 years ago, the focus, especially when you're operating from India for that matter, the focus was okay. This is just a supporting role. This is more like we have to follow regulatory requirements. We have to do certain analysis. So just get it done, more like a volume based kind of a thing. Over the years, as I have progressed in my role, like in the organizational structure, and as the viewers change, global dynamics have changed. Now the role focuses more on value addition. Like the conversation, like, for example, when we have in family office, if I'm hiring a risk team, I am paying the salary, I'm buying a particular software. How is it going to give me returns? What is my ROI on that investment? It's not more. It's not just like regulatory check mark. Middle office, where the risks sit primarily, we have that mental block that front office gets business, middle office, back office are cost centers. But the revenue dynamics, right, the cost ROI dynamics are applicable for middle office as well.
Okay.
So that is something you have to keep in mind. And it's more like when people are coming to fund managers, front office are coming to you for guidance.
That has also changed.
That has also changed, right? Because everybody, the market dynamics are so unsteady in a way, VUCA world. One person, one team cannot have that perspective, no matter how big that team is. So we do have those discussions almost on a daily basis between the front office, the investment team, and myself. As to, okay, see, we are seeing some stresses in the Japanese yen market. The yen interest rate is increasing, Japanese interest rate is increasing. So that's going to reverse yen carry.
Okay.
That when last time it happened, how the fund load happened in India. Right? Probably the leverage position in US had to be wind down. So money has to be taken out from Indian markets, and that's what we will be hearing, right? In AI boom also, and in the carry trend also, we have to provide the first of all liquidity, and second leverage to invest in the growing sector like the AI boom.
Okay.
Where is that money coming from? So it's coming from India. If that is coming from India, somebody who is focused only on India, they need to understand which are the companies or which are the sectors that are going to be affected first, where the FPI money, FII money will bleed from. And this view, it has to be built from the holistic conversations.
Okay.
So it's a very discussion-oriented approach to finance and to investing from what I'm seeing right now.
Okay. This is a very interesting part because if this is happening, the change has happened. What do you think are the key skill that any risk manager needs to have? Be it a investment manager,
Right.
managing investment risk or a credit risk. What are the key skills?
I have to break down into core technical, core analytical skills. Right? Every time you think about risk management, it has a view. When people think that's a very, very analytical kind of a skill, it's a field, and that is true. So you can't get away from credit risk management. You can't get away from models, building models, a bit of analytics, and we have R, Python, all these things coming up.
Yeah.
Having those skill sets in your back pocket really helps. You can do everything on Excel, no question about it. But having that view into model development, at least understanding the model definitely helps. But to support that, a bit of economics, a bit of larger investment perspective, a bit of global management, global economics rather, macroeconomics, that also is definitely helpful.
People, suppose I wish to join a risk team or I wish to join a portfolio team. How should I decide any certification? Like you have done so many. So what is going to be your guidance to those students that while taking it, should I go for CFA? Should I go for CAIA? What is your view on that?
So if you have decided uh, well in advance, right? Because I want to be in risk. I want to be in investment management. I want to be in mutual funds, right? The retail or Indian side of it. Then I would suggest take up skills, identify the skills required, and find out certifications which match those skills.
Okay.
It could be NISM, right? It could be any other certificate. It could be CFP. It could be CMT, right? But identify where you want to go and what are the calculate backwards, like what are the skills required there, which certification, which education will give me the required skills.
Okay.
So that is one way to do it. You're not sure where you will land up. You're just starting. You've not even explored all the ways. So as अब आवार इंचोड़दा से ज्ञान बढ़ रहा है जहाँ से भी बटोर सकते रहे दो. Then you start with something broader, build again common skills which will be required everywhere. CFA, for example, is a very broad perspective. It is a holistic perspective. And you can start from there.
And since we talked about people who are very new to finance, so how they can get an entry level role in risk, for example,
In risk.
right? Entry level role, because that's where a lot of people face challenge.
Yeah.
How they can plan this entire thing and get an entry level role.
It's a slow process, slow journey in the initial stages, right? That I'll agree. You can go for Indian banks, you can go for global institutions. Wherever you have to keep in mind that it is going to be slow journey. The first few years, early years are very crucial from learning perspective. Current markets, you have to apply for multiple roles. But whether you are looking from recruiter's perspective, right, or from candidate's perspective, skills should match. I mean, you can't be working as a relationship manager and out of nowhere you will say, no, I want to do this. So that transition is going to be difficult. You have to understand what is it that you are going to offer. At least position yourself in such a way that, okay, even if I'm a relationship manager, I have the nerve, I understand the dynamics on the ground level. I can see when the winds are turning.
Okay.
Right in forefront. So that's where you have to position yourself, your candidature, in front of the interview panels or selection committees and those people.
Okay.
So that they understand, okay, this is where this person can add value. This is where they can add their fresh views. And that definitely helps. Learnings about that person should fit in the organization. They should have the willingness to learn. Team player, they should be able to take charge. Those skills, those are age-old things. They were true 10 years ago, they're true now, they'll be true 10 years hence.
No problem. Okay, interesting. Now we have a rapid fire section. I'll ask you quick questions. You have to answer it very fast. Is coding mandatory for us?
Not mandatory. I wouldn't say it's mandatory.
Okay. Which certification should I start with?
For us,
Or generic?
generic, I think we should start with specific skill sets which are matching, as I said. If you have bandwidth, go for CFA.
Best skill to learn in college?
Please make the maximum of college experience, right? I have a view that the networking that you can build up, a mindset that you build up by interacting with your professors. If you're in good college, you'll have great professors. By interacting with your seniors, with your batchmates, that you cannot replicate. You can't pay money and get that after you finish college. Focus on the experience that your college is giving, interactions, and network if you can.
Which certification helped you the best or the most?
They each played a specific role, I would say, and different stages because I've changed my direction, changed my profile so many times. So they had their specific roles, their specific importance in each point of my journey.
Okay. One mistake students should avoid.
Students should avoid only looking after resume. Resume is important, but what is there on the paper should be there in the person. Not of saying you see a person who's really good in the resume, we start talking with them, there's nothing. So you should be first making yourself as a finance candidate, right? Or rather a professional as a person. Resume will follow. It's not the other way around.
Correct. Wonderful, wonderful. This conversation, Chinmay, is really, really interesting and helpful. And I'm sure a lot of people who will be watching this podcast will learn a lot, especially about the investment management risk. and that fear that how I can change industry, and your certifications helped you. All of this is going to be really helpful for a lot of students who are going to be watching this. So again, Chinmay, thank you very much for taking out your time talking to us.
Thank you. It was my pleasure. Thank you for inviting me.